Jamie Dimon, chief executive of JP Chase, has put out an interesting warning on where he sees the economy heading over the upcoming future. Now, this is very interesting because Jamie Dimon, he has a unique insight into what's going on in the economy with America. Why does he have a unique insight? Why? Because he runs the largest bank in America, JP Chase. He sees the behavior of customers. Are they putting more money in the bank or are they taking it out and spending it in the economy? He sees the behavior of businesses. Are they hoarding money in the bank because they're worried, or are they trying to invest and grow their business? You know, Dimon, I'm sure he's talking to the different Fed officials on their plans with the economy in the future. Are they raising rates? Are they quantitative tightening? What's their plans with the economy, with their policies in the future? My point is that he has a unique insight into the day-to-day runnings of the US economy and American business. So let's see what he's had to say recently. Jamie Dimon sees only a 10% chance of an economic slowdown that doesn't lead to a recession, while ominously warning there are 20% to 30% odds of something worse. The banking boss said on a client call that while the US economy is still strong and consumer balance sheets and businesses are in good shape, there are storm clouds ahead, Yahoo Finance reported. Hiked Fed rates, quantitative tightening, so that's what I just talked about, the Fed policies, oil shocks, the war in Ukraine, and rising US tensions with China have pushed Dimon to think that a mild recession has a 20% to 30% chance, while a harder recession has the same odds. But the remaining outcome may be something worse, in quotes, he said. Dimon stresses it is a mistake to point to any single point forecast as to what will happen with the US economy, but he has a lot to be pessimistic about. Confidence is low, Dimon argues, because of inflation, because of partisan politics, and a lot of leftover anger from the virus. We'll just say the virus. He predicts inflation will not decrease the way the Fed wants it to. That's what I see as well, calling the goal to bring it down from 8% to 4% by the end of the year highly unlikely. If they can achieve 4% inflation by the end of the year, I'll give a big clap to the Fed, but just like myself, like Dimon, I don't see this happening. 4% inflation will be a great achievement for the Federal Reserve. Dimon adds, I wish we had the spirit that we were all here to work together, but it seems we just got nastier somehow. Yes, I see the same thing. I don't know if you guys are reading the news, reading the comments, what your guys' sentiments are on today's environment, but things definitely seem to be more clashy or nastier, as Dimon puts it. Okay, so let's break down those odds so that I just want to try and understand that. He said a 10%, only a 10% chance of an economic slowdown that does not lead to a recession. Only 10%. Then he said 20 to 30% chance of a milder recession happening, and then another 20 to 30% chance of a harder recession happening. The rest of the odds, he said, may be something worse, which he didn't say what something worse may be, but worse than a hard recession? I don't know, maybe another economic crisis? I mean, I don't think he knows exactly what he means either, but worse than a hard recession. So if you look at all of those odds together, the highest probability is that we're gonna see a recession of some sort, whether it be a mild recession, a hard recession, or something worse. This is all according to Jamie Dimon. It's not necessarily according to myself, but it is interesting because, as I said before, he does have a unique insight into the American economy. So what are his reasons? Why is it so likely that we're going to see a recession? The first thing that he said is that the Federal Reserve is hiking rates. So let's just take a quick look at this. This is the federal funds rate, and I'm sure if you've been paying attention to it, you'll know what's been happening with the federal fund rate over the past year. It has shot up like a rocket. So basically at the start of the year, it was basically 0%, and then the Federal Reserve said, okay, things are overheating, let's slow things down. How do we slow things down? Well, we raise interest rates. We make it more costly for the consumer to borrow money, and thus they'll borrow less money and spend and invest less money in the economy, and thus the economy slows down. The thing that they have to watch out for is that they don't make it slow down too much, causing a recession. So 0% to over 2% federal fund rates today. Then the other thing that he warned of was quantitative tightening. So this is the Federal Reserve, instead of injecting money into the system, which is quantitative easing, he's talking of the Federal Reserve's plans to quantitative tighten. So the US central bank's move to reduce $9 trillion balance sheet comes alongside steep rate rises to tackle persistent inflation. This is one of the things that they use to tackle inflation. They take money out of the system, money becomes more scarce, and thus there's less money to demand goods and services. Less demand should theoretically lower the price, and hashtag lower inflation. So those are two things, federal funds rate and quantitative tightening. The third thing was what is this? This is quantitative tightening again. The third thing was the oil shocks. So what he's talking about here is just the extreme rise that we've seen over the past year and a bit in oil prices. So April 2020, the price for a barrel of oil was $21.76. Since then, prices have just been going up and up and up. And I'm sure you've been seeing it not only on the news, but you've been seeing this with your gas prices. It shot all the way up to $116. And yes, okay, over the past couple of months, we have seen a slowdown, but still, compared to what it was in 2020, early 2020, prices are way higher than they were a year and a half ago. The other thing he talked about was the conflict in Ukraine and Russia, and obviously they're not focusing on producing as much and selling to the world economy. They're fighting right now, which does slow things down, especially when you consider all of the good things that Ukraine and Russia bring to the world economy. The last point that he talked about was the increased tensions in the USA and China. And I'm sure one of the things he's getting at was when Nancy Pelosi went to visit Taiwan, and China were not happy about this because obviously they're kind of looking to take over Taiwan. So she visited Taiwan because she wanted to say, listen, Taiwan, we support you, we support your independence. China, they weren't happy with this. The Chinese government, again, I see so many stories like this that just make me dislike the Chinese government. They're just so power hungry. They're just trying to take over so many different islands near to them, and they just do it in such a sneaky way. So I'm definitely backing the USA in this, and I'm definitely backing Taiwan in this conflict. So all of these things, guys, are the reasons why he is predicting this recession, this mild recession, this harder recession, this something worse, whatever he means there, of happening. It's for these 5 reasons. I'm not overly worried about it, but one of the things that when I see these different headlines, this is not the only headline I'm seeing. It's not only Jamie Dimon warning of a recession, it's lots of other quite highly qualified investors. I'm not worried, but there is a part of me that thinks, okay, let's just try and make as much money as we can in this environment before things may turn sour. Because right now, overall, the economy is in decent shape. There is still a lot of money in the system, and you might say, no, the stock market's gone down by so much, the economy's not actually in that great a shape. I would argue the other side of things. I think we've had a 12-year bull market essentially. Interest rates still on a historical level are still low, and I still think there is a lot of money to be made, especially when it comes to my business anyway. But I can see what Jamie Dimon is saying, that things may get worse in the future. That's why I'm keeping my debt very low. When I get extra money, I'm just putting it away and paying off my debts. And I am playing the investing game quite safe. Are you guys doing the same? What's your strategy?